Welcome to the Real Talk with Missy and Fabio.
The on the side of real estate with all you must know to survive in this market.
Hello, everyone. Welcome to Missy and Fabio podcast. Today we have a great guest. I mean, this is the guy that I find him in every place that I go. So this is, I'm not kidding. I mean,
You're everywhere.
Well, I'm trying to, but he beat me all the time. So, welcome, Richard.
We don't need to tell them everywhere we've been.
Well, it's just not working and stuff like that. Always working.
Richard is an insurance agent, and it's a crazy, awesome opportunity to help people get educated on different options as far as insurance goes. And we met a couple years ago at one of the local bars / restaurants, and he was new to town, and I visited with him a little bit. Very congenial gentleman. So we just have all kept up with each other, and at this point we just really want him to share with you stuff about insurance. It's kind of one of those things you gotta have, right?
Yeah.
Yeah, it's one of those things you have to have. Everybody hates to have it, but you have to have it. And if you're going to have it, you might as well make sure it's properly protecting yourself as well as your lender or whatever. The key thing about insurance, particularly when it relates to like homeowners insurance or property insurance, is that there's many companies out there. Insurance is a incredibly large business, and there's literally hundreds of insurance companies that can write insurance here in Virginia for homes. But for any given individual property, the key thing is to make sure you shop around, because you can't believe all the ads you see on TV. Just because they say they're a great company doesn't mean they'll have a good rate for you on this particular house. And really the only way to tell is to shop among multiple companies. And so
it's really individualized, though, too, depending on how many cars you have, the size of your house, your debt-to-income ratio, all this stuff, right?
The insurance companies are incredibly sophisticated in how they establish a premium for you in an individual situation. It's the property that you're purchasing. It's the history of that property. It's its construction. It's its loss history. There have been claims on that property and so forth, even before you buy it, as well as your own history with insurance. Have you had claims previous in the past in previous properties you've owned or rented, and so forth? It's your credit plays a role. How many people live in the house? Do you have dogs? Do you have children? There's all these sorts of things that play in. There's literally hundreds of factors.
What kind of kids?
Well, yeah, it does ask. I've never had them ask about what kind of kids, but they do ask about what kind of dogs. There's, all insurance companies or most insurance companies do have certain breeds that they are concerned about. Doesn't mean they won't insure you, but they may charge you a little bit extra.
Oh, really?
As a premium because of the perceived liability
Big teeth
risk.
Dogs.
Yeah, they're and different companies. That's another reason to shop. If you have pit bulls, for example, then you're gonna be limited in the choices of people. You can get insurance, but you may be limited in the companies that would insure you for those, or they may require that there's a liability exclusion, for example, for dog bites. And so all these factors have to come into play, and you discuss with your agent to make sure that you properly disclose all the information and find the insurance company and coverage that's matched to your individual situation.
So you don't represent just one company. Your job in life is like our lender that we work with, that she looks at everybody's loan products to help fit the right people with the right product.
Yes, I'm an insurance broker with a company called Goosehead Insurance, and we represent, I lose track, but it's well over 30 insurance companies that write homeowners insurance here in the state of Virginia. What we do is we take your information, thank God for computers, we put it in computers, it goes out and shops among all those companies and comes back and gives us an indication, what we call a preliminary rate, which shows what they would charge for insurance for that. Then we look and say, okay, the top 2 or 3, let's go dive into the individual characteristics of those companies and policies and come up with a recommendation on what's the best coverage. We often look at not only the home insurance, but the other insurance products you need. If you've got automobile insurance, maybe you've got a boat, other things like that. Most insurance companies will give you discounts if you bundle policies together, so it makes sense to do that. Probably about 75% of the time when I go out and look for, say, a combination of auto and home insurance, it will make sense to put them with the same company, but not always. Sometimes you'll find home insurance is very, very cheap with one company, but their auto insurance is very expensive, and vice versa. So sometimes we actually recommend you end up going with different companies. You'll forego discount that the companies would give for combining, but their individual prices is so much better that you're better off splitting them up. The only way to know that is to shop among all the companies, and it's I always joke to people, say, hey, I can give you the 800 numbers to all the companies. You can call them and do it, or I can do it for you, and I can guarantee you I can do it faster. So.
And so the individual doesn't pay you; the companies pay you.
No, the companies pay me. We get paid a percentage of commission on the sale for the premium, and quite frankly, I don't really care who the company is we end up with, as long as you get the right coverage and so forth. So I kind of joke with my clients. I say, look, yes, I do get paid ultimately by the insurance companies, but I'm really working for you. I'm trying to help you beat them at their own game.
So you're agnostic. You really, it's just whatever is best for the client.
Absolutely. And one of the things we get into situations where everybody's situation is different. Sometimes you're working with a lender trying to get a loan done for somebody, and there's a tight debt to income ratio or something like that. And we will work to try to make sure we can try to find somebody that's going to fit those constraints. I don't ever make any guarantees because I'm not in a position to do that. However, we do have enough carriers with the different characteristics. More often than not, I'm able to find something that's going to work for not only the lender and his requirements to get the loan approved, but also provide good coverage for the client. One thing we won't do is we won't shortchange the client on coverage in order to meet a target premium, because that's a foolish thing to do.
Really?
Yeah.
So I think I told you, I just had a deal that within the last 6 months that my homeowner, who I was representing, had 3 claims over a 15-year time period, but they were just things that happened.
Yeah.
It wasn't something that he needed a new kitchen floor for, and then the buyer had 2 claims, and the quote that she was getting put the insuring factor so high that her debt to income ratio was too high, and she couldn't afford to buy the house then. So we had to shop.
Right, you have to shop because you have to realize that almost all insurance companies look at previous losses on the property you're purchasing. Mm-hmm. They want to know the loss history of that. We run reports to get that information, and then they'll also run loss history on any previous properties you have. How the companies look at that, how they factor that in their underwriting decision, varies by company. Some companies only look at it in terms of eligibility, total number of claims you've had. Some of them look at the fact and say, hey, if you're purchasing a house, yeah, we want to know if it had previous losses, but we're not going to count that against you because those were somebody else's losses, not mm-hmm. you. And so again, it just points to the fact you've got to shop around, mm-hmm. because some people might flat out say, hey, we're not going to insure that house, where somebody else will give you a decent rate. And quite frankly, with the number of carriers we have, I don't try to predict who it's going to be,
right.
because it just varies so much between individual situations. It just, again, the key message is you've got to shop around to do that. Mm-hmm. Don't ever. Another joke I tell people is don't fall in love with your insurance company, because they're not going to fall in love with you. You want to find out, just have a couple of claims and you'll find out about that. But our role is to try to help people get good coverage and to get it at a reasonable cost.
Well, I think the sad thing is, if people, like this lady, if she had stopped, she was told, no,
mm-hmm.
you cannot buy this house, we cannot give you a loan, but it was because of the insurance thing. So if somebody just stops there, that's crazy. You got to keep questioning why and try to solve that issue.
Well, the key that Richard said that was the most important is that he's not working for the insurance. He works for you. So people have to understand that, because sometimes, as a consumer, we don't know about. We need to be educated about that
mm-hmm.
stuff.
Well, I don't expect I expect most of my clients to know a lot about insurance. I mean, you buy it
it's the highlight of our life.
few times in your life, and quite frankly, if you have insomnia, you just pull out your insurance policy and read it one night, and it'll cure it. But again, it just points you really need to shop and work with somebody who's going to help advise you and be in your corner. I will point out another thing to consider, that we're running into a kind of crazy. I hear this kind of crazy real estate market. Is that true? And so there's a lot of different contract terms come into play, and you have people purchasing a house and then renting it back to the current owner for some period of time, and so people don't often think about this. Most insurance policies, homeowners insurance policies. If you purchase a homeowner's insurance policy, it is for you to be the primary occupant. And if you're not the primary occupant, they're not going to. The insurance policy is basically void. So that if you've got a situation like that, what you often have to do is purchase a
rental.
landlord policy, where essentially you're going to be the landlord for maybe 60 days or 90 days or whatever it is, and put that in place temporarily, and then replace it with a homeowner's policy.
That's a good call.
that's
Can
a
that
great.
happen quick enough though?
Sure, yeah, we can write a landlord policy in the same amount of time we can write a homeowner's policy, and we can switch it, instantly. So, a lot of those kind of situations. However, there's another thing. Some insurance companies will have an endorsement you can put in your homeowner's policy, which will allow you to rent it out to somebody. So again, there's a lot of different solutions. Again, the key thing is, not all this stuff happens overnight, and sometimes
Yes.
we have to have conversations with underwriters and things like that. So a message to anybody that's purchasing a home: get involved in the insurance decision early. As soon as even when you're looking at a house, if you're serious about it, maybe going to make offers, you could reach out and get some preliminary quotes on the insurance, which will start to help you find out if you've got potential loss issues or something, or it may be some issue that's going to create a challenge. If I've got time, we can deal with almost any kind of challenge. It's like when I get called 2 days before closing, it gets a little hairy sometimes.
Well, this is a big deal now
Yeah.
because we all, as a listing agent, we're selling the house, closing on the house. The funds are available to the owners.
And
So,
we are,
and then they're staying in the house
Yeah.
for 30 to 45 days afterwards as a tenant.
Yeah.
Yeah.
So that's where you're saying they should just call their insurance company and say, hey, now we're going to be the tenants of this home.
And also, so if you're the seller of that house and you're going to be, you sell the house, but then you're going to be in the tenant, you have to change your insurance too, because you had a homeowner's policy on it. When you sold the house, that homeowner's policy is no longer void. You can't have a homeowner's insurance policy on a property you don't own.
So it is void, you mean, but
Yes,
so it needs
yeah.
to go into a
So then
tenant's-
they need to have a renter's policy because they need to cover their contents.
That's a
Their,
big
you know,
deal.
well,
And then the purchaser needs to have a landlord policy to cover the house itself. They're not covering your contents as a tenant. They're
So
covering the
is
house.
it, because most often our post occupancies are 30 days. Are we good to kind of,
It's a conversation that I
Yes,
have
you
have with the underwriter of the insurance company. Some of them is going to be a week or two, or maybe even up to 30 days. They'll say okay. Sometimes they'll say no. Some companies don't do that, or they'll say no. Get a landlord policy. So it's a conversation that needs to be had. There's not one pat answer for all situations. The key thing is we can solve it for all parties. We just need to know about it ahead of time. What I run into or becomes kind of a challenge is somebody says, "Yeah, give me home insurance." I get it, and like the day before they move in, it's, "Oh, by the way, we're going to rent back for 30 days." I'm like, "Whoa!" I kind of needed to know that.
Yeah.
So it's the key thing is the early communication. And again, I just suggest to anybody out there, when you're getting serious about a house, you're trying to make offers on it, go ahead and start getting the quote process going. It takes us very little time to start doing some
so
quotes.
when they ask for a quote, can they just do it by Stafford County or give you a county? Because obviously they don't have an address yet.
Well, we can't really do a quote until we have an address.
Okay.
So, but it could be a house. You don't have to have a contract to have it. You can say, "I'm looking at this house. You want to give me a quote on it to get an
Okay,
idea."
okay.
And I'm happy to do that. It doesn't take me very long, and then and I can do a kind of rough and quick and dirty quote that maybe is not final accurate, but give you an idea.
But it's pretty
And
conservative.
conservative, and then it also will, we can look at the losses and see if there's any previous losses, so we can identify any problems. Other things that impact quotes is rates, is the age of the home, but probably even more importantly is the age of the roof. The age of the roof and the age of the HVAC system. The age of the roof kind of makes sense because probably the number one claim for homeowners policies is a leak in the roof or hail damage to the roof. As the shingles get older, they tend not to hold up as well in the thunderstorms we have around here. So all insurance companies want to know the age of the roof. So obviously if you're selling and you've got a new roof in the house, put it in the listing. It's a big deal. But finding out the age of the roof, the age of the HVAC system, particularly the heating part of that, is key because the older the heating system is, the more likely it's to fail in the wintertime. What happens in the wintertime? It fails, pipes freeze, water breaks, so it becomes an insurance claim. So they're interested to know if the HVAC system has been updated. A lot of companies, if the house is 30, 40 years old when it was built, if they haven't seen an updated HVAC system, they will not write it. They want to know, and which most of them have
30,
it.
40 years it should have probably.
Yeah, they
Yeah,
probably have been.
yeah.
So, but we don't always know that, so we have to ask that and ask that question. Those are kind of things that influence the rates.
Go back to the roof. So it's just so funny that one company will say, "Oh yeah, you need a new roof." The next door neighbor says, "No, I don't think so." And you all have had the same damage, obviously. how does that vary so much?
I
know
don't.
it's a difference between whether you're renting the house out or
Yeah,
whether it's your primary
yeah.
residence or not.
Kind of the key thing is, I say if the roof is older than 15 years, you really need to start thinking about it. Despite all the claims, and there's, roofs that claim they can go 30, 40 years, we see that anything over, approaching 20 years, it should be replaced. And so I think if you talk to a lot of roofing contractors, they'll tell you the same thing. So, and you got to keep in mind now, any house that's been built in this century has a 20-year-old roof on it, so it's like, you start seeing a house that was built in the 90s, it should have had a roof update. And most of them have, we need to know that.
If we have a hailstorm on Sunday and so people note it and they call their company, how does it work from there? I mean, should they even bother or?
Well, here's something about that. So
it's documented at least.
Well, here's one of the challenges you've got. So if you have and I've seen this happen. I'll just tell you a couple of anecdotes. So a lot of times when we have these severe hailstorms with a lot of damage in the area, you'll have these contractors come into town, most of them coming from out of town and so forth, and they're running around through the neighborhood saying, hey, we're going to inspect your roof for you and see if you need any damage. And they'll ask you, hey, who's your insurance company? Oh, I'm with Nationwide or whatever. Okay, fine. They'll go inspect your roof and they'll come back and say, oh, we think you need to be replaced, and we'll take care of it with the insurance company. You may say, no, I'm not going to do that. Well, guess what? They may have already filed a claim with the insurance company. They'll check with the insurance company to see if you've got coverage. So then a few years later, you go to sell the house and they say, oh, there was a $0 payout loss claim 2 years ago for roof damage. And you go, what? So
they take the prerogative to go ahead and file a claim?
They contact the insurance company.
Start a process?
You gotta, if you're an insurance company and a roofing company says, hey, we're inspecting this guy's roof because we had a big hailstorm last night, what does the insurance company do? So likely damage,
Right.
So they note it. So the key thing is, don't tell anybody your insurance company, and make sure they're not authorized to contact
That's a good
them.
tip.
Because I've had people where they've had, and again, a zero payout claim because nobody ever actually paid out anything, but it showed up on their record and affected their insurance rate. So, and you say, well,
I can believe it.
and it's like a lot of things, you can sometimes argue with those and get them removed from the record, but it's almost like dealing with the IRS. You don't want to deal, you don't want to do that if you can avoid it. But in general, if you have a major hailstorm, your roof has probably been compromised a little bit. Whether it's compromised enough that it's going to leak, I don't know. But it's like it's been stressed, and so again, that becomes a judgment call about when you should replace that. But then that's sort of why the insurance companies look at, hey, up to 20 years, we're anticipating it's going to need it.
So if you have a claim and it's an older roof, is it most likely you will not get coverage then, or how does that work?
Well, you can get coverage. You can always get coverage. We've got somebody that's going to, I tell people, like, I can insure anything. It's just a question whether you want to pay the premium, because we can find somebody that can insure it. And sometimes we have situations where a house is older, has a lot of claim history. Maybe the person buying it has a lot of claim history, and all what we call the so-called standard carriers just say, no, we won't insure that house. Well, there's what's called the excess and surplus market. These are insurance companies that basically, the court of last resort. They're the people who insure things nobody else does. As you can imagine, their premiums are going to be higher.
Right.
But these are not necessarily no-name companies. I mean, you've probably all heard of Lloyd's of London. Well, they fall in that category. So,
really?
I've had people insure their houses with Lloyd's of London in this area because they had an older house that had a lot of claim history, and until they could get the roof updated and things like that, that was the only thing they could do.
So speaking of older homes, we're in a historical town, and we're on a river,
right?
And we have flood opportunities. Can you address that a little bit?
Well, there's two things there. First of all, the homes that are in a designated historic district, sometimes some carriers will not deal with that. They don't want to. They will not insure homes in a historic district. It has to be that they were designated as historic. And you get into gray areas here, but it will, and particularly in some parts of downtown Fredericksburg, even other parts of the area. You can run into some challenges with a historic home. Again, you can find insurance for it. It's just going to limit your choices. And mainly that has to do with the fact that if you've got a home in a historic district and it's damaged, they want it rebuilt back the way it was. Well, it's obviously more expensive to do that.
And sometimes impossible.
Yeah, sometimes impossible. And most times the companies will insure that we're going to build it back the way it was but use modern materials. We'll make it look like it was was, the exterior and so forth, but we're not going to use 2x4s that are really 2x4. We're going to use the ones that are, things like that. Yeah, whatever it was. So maybe not put hard pine floors down and things like that. So that, just to know, if you're looking at a property that's literally in a historic district, again, it's going to create some challenges for insurance. Don't
be proactive.
Be proactive.
Yeah.
Get involved early in the process, because it just those situations tend to take a little bit longer to get the final answer on the insurance. So the more time we have, the better,
How about
better we
flood
can get.
insurance?
Now, flood insurance is a whole nother thing. So flood insurance was created by the federal government basically because private insurance companies would not offer flood insurance, and that's because a flood, like a hurricane and some other types of things, when those events happen, they don't affect just one property. They affect multiple properties, and so it can literally drive companies out of business if they're insuring a whole bunch of properties in that area. So the flood insurance program was created by the federal government, administered through FEMA. You can buy a FEMA flood policy through almost any agent, including myself. And they guarantee availability of flood insurance. However, the federal flood insurance program, the National Flood Insurance Program administered by FEMA, suffered tremendous losses during two events, Major Katrina and then Hurricane Sandy, which was up mainly in the Northeast. As a result, the program is billions of dollars in the hole.
Oh.
Well, it's guaranteed by the federal government, so as long as the federal government doesn't go belly up, we're okay. Next week. Congress, after that, has increasingly put pressure on FEMA to make the program more sustainable, which basically means they've raised the rates. They're raising the rates more, and they recently had a rate increase that was rather dramatic. So the rates for that for those policies have gone up rather dramatically. As a result of that trend, there are now private companies that have re-entered the flood market. So you can get private flood insurance, often at a significant less premium than the FEMA program, if the private insurance will write that particular location. So if you're right on a river, right on a coastline that's had a significant history of flooding, they probably won't write it.
Right.
But if you're in downtown Fredericksburg, which has had some floods, but the last major one was in 1942, I think it was, then the private flood insurance can be dramatically less expensive. I had a recent situation here where a commercial building in the downtown Fredericksburg area, they had a FEMA policy. Their policy was over $9,000 a year on this commercial building, and their deductible was $50,000. So
Damn.
the first $50,000 of flood damage was on you anyhow. Well, I was able to find them commercial insurance for literally about $3,400 a year with a $2,500 deductible. So that's just an example of what private flood insurance can
And those are
potentially
just,
do.
and they're mandatory, right? When somebody buys that building or buys a house downtown, they're
It's
is it their lender?
It's usually the lender that requires it. If it's a government-backed loan of any type, they require flood insurance. If the building is located in what's called what we nominally called a flood zone, it's called a high-risk area or something in the FEMA nomenclature, but nevertheless, it's in what everybody thinks of as a flood zone. If you're located in a flood zone and you're getting a federally backed mortgage, they require flood insurance. Okay. A lot of private lenders also do. Some don't. Most of them do. And so if you're required to have flood insurance, you have to have that. Now, flood insurance is a totally separate policy. It's by itself. And just in general, it's probably going to run roughly in the order of magnitude of what your homeowner's insurance is, depending on where you are. If you're in a flood zone, if you're spending $1,000 a year on home insurance, you're probably going to spend $1,000 a year on flood insurance. And there's quite a bit of variation there, but just to kind of give people a general idea. As more and more private options become available, it's more competitive, and so that's the way to go if you can do it. Now, another thing with flood insurance is if you have a property that has a current national flood insurance program, you are allowed to take over that policy. And if you can do that, you should, because those policies are grandfathered in at older rates.
Okay.
And so, and another thing about flood insurance is,
Look at him talk about flood insurance.
one of the things that there's a thing called an elevation certificate. The The flood zones they basically give an elevation of how far they expect the water to rise above sea level, right? And so if you have a what's called an elevation certificate, which is a survey that's been done on your property that shows where the first floor is, how many feet above sea level it is, you can enter that information in, and depending on how that relates to where the flood is, it could have a dramatic increase on lowering your premium. Flood elevation certificates are like another survey you have to get done by a licensed surveyor. They're not necessarily cheap. However, if the property has one, you can use those can convey with the sale.
Can a traditional land survey do
Most
an
land
elevation
most
survey?
land surveyors can do them. They're capable of doing them. You can't do that. There's a whole procedure that they follow and a form they follow with FEMA to do that.
Nice.
But again, if you're buying a property in a flood zone, ask, is there a flood elevation certificate, and can we have a copy of it? Because
That's huge
you can
too
use
for
it.
buyers. To
Yeah,
know.
because you could flood. I don't know specifically, but a flood elevation certificate would be several $1,000s to go get one from scratch. And so if somebody's got one already, then
just like a survey.
right,
We always
exactly.
try to get the survey
Exactly.
for the buyer.
It's another survey. It's not only doing the outside, the boundaries of the property, but also the elevation.
That's awesome.
That's why it's called an elevation certificate. But that's another key factor that can help lower your flood cost. We don't. And now another interesting factoid about flood coverage is that 80% of the claims for the National Flood, not 80%, 20% of the claims made under the National Flood Insurance Program are made in areas that are not in a traditional flood zone. Now, if you think about that, if most of the properties that are not in a traditional flood zone don't have flood insurance, and that's the case, if they're getting 20% of the claims out of that area, then this
Something should be a flood zone.
and this is basically, we've got some experience in our company. We do a lot of business down in Texas and the Houston area, and when they had all the floods down
Yes.
there, a lot of that area didn't have flood insurance. And flood insurance, is not a covered peril under your standard homeowners insurance. They make that very clear. In fact, they put disclosures down on top of the policies, and you're not covered for flood, and so that's all going to be on you if you.
So what's the ugliest you've seen? Something that were really ugly
So many
that we
things.
can all learn a lesson from, maybe.
Well, there's another policy. There's another interesting coverage that we always quote on everybody's insurance policies called water backup coverage, and so a standard homeowners policy in Virginia or actually anywhere in the country does not cover against the peril of water backing up from a sewer or a drain line,
Yuck.
which can include a sump pump. And so here in this area, most houses have basements. Most basements have sump pumps, and water comes in around the foundation and it pumps it out. Well, what happens in the middle of a big storm? Usually the power goes out. So if you don't have power to your sump pump, it's not pumping the water
So
out.
that's why you get that
So you
backup battery.
Yeah, you get the backup battery and you change it on time. But if you don't have that, you get flooding in your basement. A little bit of water can cause a lot of damage because carpets have to be pulled out. If it gets high enough and gets the drywall wet, you've got to cut the drywall and remove that, and insulation and so forth. And you need to do that quickly because otherwise mold could set in. And so those aren't covered under standard homeowners insurance. You need water backup coverage. It's an endorsement. You add it on the policy. We usually do that.
So get your water backup
water-
coverage.
Yeah, an ethical agent will always quote that to you. And so if you don't know you need it, they'll tell you need it. But you can get a variable amount. You can say I'm going to cover up to $20,000 or $30,000 worth of damage with that. The most egregious case that I had with that was a home here in Spotsylvania, where they were on a cul-de-sac, but their home was below the level of the street. So they were in an area with sewers, sewage connection, and they had a pump in their basement which would pump the sewage up to the thing.
Grinder pump.
Well, yeah, grinder pump.
Grinders.
So they somehow, again, nobody really knows how, the line got blocked. Well, between the street and the house.
Some kid shoved the Barbie doll down the
Whatever. Could have been. Who knows? Well, the pump was pumping, and the
I don't
sewage had nowhere to go, so it went back up through the house and started coming out of the toilet and went all over the house. And the first floor of the house was flooded. You can imagine the amount of damage that was.
Yeah.
So,
I don't even want to think about it.
Yuck.
Yeah.
So those are the kind of scenarios you have. The other more likely scenario is, in addition to the sump pump, is just a stop-up toilet. somebody stops up a toilet on the second floor and it overflows, or where the water goes over, it runs down to the ceiling. You can cause a lot of damage with a little bit of water. Without water backup coverage, that would not be covered.
What about the washer and dryer on the upper level? And do you see that a lot?
Well, that's a new feature now. Everybody wants that.
Yeah. Well, let me think about that for a second. The water damage from that should be covered under the standard policy because it would be from a leaking pipe, probably.
Could be.
It's not. Yeah, but again, it might. Again, I'm not a lawyer, so you could get into a debate about whether it should be covered in water backup. But again, if you had water backup coverage, you'd be covered because it's either covered in the standard coverage or the water backup coverage.
Nice.
But again, a little bit of water can cause a lot of damage.
So we're getting lazy. We don't want to go downstairs to the dryer.
To the washer and dryer.
So
I know,
it's easier, but at the same time, it's going to get you maybe a
could be
situation.
It
Yeah.
could be, it could be. But just make sure you check those pipes and the hoses. Probably replace them every now and then so they're not wearing
Yeah.
out.
So lesson today,
God, we
Shop
learned a lot.
around.
My gosh.
you got to shop around, everybody, even for your lender. We all recommend our favorite lenders.
Yeah.
But for new construction, for just a traditional buy, shop around. For your insurance, shop around.
But you have to
Yeah.
have an insurance on your side.
Let
so
me
you-
just add one more thing there, because just thinking about it. People, a lot of times people now, particularly in this market, maybe not want to sell their home, but they want to add on to it, and they want to do some extensive remodeling and everything like that. Well, as you remodel the house, two things will happen. Your value of your house is going to change. You need to have your insurance reviewed to make sure that you ultimately have enough coverage. But during that construction phase, you need to make sure that the area that's being constructed is also covered, because that's the new part. It's not part of your house. It's not going to be covered in your existing homeowner's insurance. You need what's called builder's risk insurance. And builder's risk insurance would cover that. It would cover things that you don't necessarily think of, like you've got a bunch of building materials that show up and they're stored in your driveway. If somebody was to haul those off in the middle of the night, then you want those covered against theft and things like that, and that's what builder's risk insurance would do for you.
That's cool.
So sometimes people go, well, my contractor's getting the builder's risk insurance, and so I don't need to do that. Well, that's true. That would cover for him and his risk and would cover the building materials he's supplying. But what happens if you have a falling out with your contractor in the middle of the project, and all of a sudden he leaves the scene?
That doesn't happen, does it?
It does potentially happen, and here's something about builder's risk. When you write a builder's risk policy, you can get one from most companies up to 30% completion of the job. If it's over 30% complete, they won't write a builder's risk policy. So you could find yourself in a situation if a contractor walks off in the middle of the job where you can't get insurance for that.
Oh,
So
because
again,
it's already
you
too much is done.
You should get the builder's risk insurance yourself.
See, that's crazy.
There's a lot of stuff
we
to.
gotta
Oh my
take some
God!
notes.
I learned a lot
Yeah,
today.
no, that's awesome.
Well, and sometimes people think, well, I can just get an addendum on my homeowner's insurance to cover that. Some of them do provide limited coverage for things, construction projects. They'll do things like say, we'll cover building materials after they're installed. Well, if the building materials are installed, you're not covered against theft because nobody's going to steal the building materials after they've screwed down the deck boards. They're going to steal them when they're laying in the driveway. So you should make sure you work with a competent agent.
That's awesome.
Make sure you get the right
So
coverage.
I need for you to kind of do some bullet points for us, and then we'll put it in the podcast
Yeah.
notes.
Yeah.
And along with your app
Information.
that you
Sure.
have, that tell them a little bit about your app real quick.
Yeah, and I mentioned that we make it easy to shop, and then we try to make the whole process simple. So we have an app which is basically thing that pops up on your phone, or you can do it on your computer, either one, where you just literally ask you a few questions like what's the address, and it's an intelligent app. As you start typing in the number in the street, you'll probably get the first few letters, and it'll pop up and show you the address and say, is this the right one? Yes. And then it'll ask you for your current address, and it'll ask you a few other questions and get your name and address and so forth, name and phone number. And then it'll go out and do that shopping I talked about and show you the preliminary rates. And then you say, oh, that looks pretty good. The great thing about it is it'll show you the great divergence of rates, or how much they vary among companies. It'll show that, for this particular house, you can get home insurance from probably $800 to $3,000, depending on which company you go for.
So if they're looking,
Yeah.
if they're doing home search, then they don't have to really call you directly.
No,
They
Yeah.
can just
you can do that
punch it
right
in.
away. Punch it on your phone, literally,
Okay.
and do it. It literally takes less than a minute to do. And then, and at the end, it gives you the option to say, yes, I'm interested, and you'll notify me, and I can work with you to finalize it. But it's a great tool to get an idea of what the insurance is going to
Make
be.
it easier, everybody. Everybody,
Awesome.
just
We try
click.
I got to make it easy, because it's like nobody. Insurance is not one of the things you want to spend a lot of time on.
No.
Generally, I usually end up spending maybe a half hour to 45 minutes total with somebody. I'll spend the 15 minutes or so getting all the preliminary information. I'll go do the work, and then I'll get back with them and review it, and we'll issue the policy. So we try to make it a simple process and not take up a lot of time.
So I guess a lot of people love you when they have an issue. That's when they call you and say, "Oh my God, you're here."
Richard, we have poop coming up into our bathroom.
Well,
You're on.
Yeah, well, that's great. And I go like, "You're breaking up. I can't hear you." No, we do. Do have relationships with a number of contractors and so forth. We reach out to, and in that particular situation, we called right away. Got some people to start working on it.
Wow.
So it's we don't get those calls very often, but
Thank goodness.
Yeah, thank goodness. But we do that.
Well, thank you for your time.
Yeah.
Thank
And
you.
you know what? It's so funny because we all think insurance is boring as hell, and
I thought that
that
too.
we know what we need. But you know what?
There's
I mean,
a-
I'm going home to make sure we got that backup
Well,
stuff.
I found out
What's it
the
called?
rim back. Now I have to, we have something that.
Yes.
Yeah, it's a
That's-
lot of little details people don't think about. So.
Yeah.
But anyway, you guys, Missy, Fabio, and Richard, we thank you ever so much for tuning in. We would love for you to have any questions. Just ask, fill out the questions at the bottom and your comments. And then we want you to hit subscribe and like and enjoy
Please.
us. Help us grow. And
Yeah.
we will bring you more fabulous,
Yeah.
exciting content like insurance.
Yeah, and if you see Richard on the bar or whatever, just say hi to him.
Yeah. Okay, great. Yeah, do that.
Thank you.
Great, good to see you.
Bye-bye, y'all.
Thank you.
you.
So glad you joined us today.
Please message us on Facebook, and Fabio and I will respond to all your questions as soon as possible,
Find us on YouTube, Spotify, Apple Podcast.
or anywhere you listen to your podcast.